Hi and welcome to Only the Highlights by the Kenyan Wallstreet, your first fresh recap of the biggest stories shaping Kenya's economy. My name is Maina Chege. In today's overview, Chickengate scandal convict James Oswago and 36 others shortlisted for IEBC chair position. Heightened investor interest in money market funds drives rapid growth in unit trusts. Banks push for common reference rate for loan pricing. And finally, the SHA Charade, the Ministry of Health faces growing scrutiny over the Social Health Authority and the Social Health Insurance Fund, that is Shif. James Oswago, the former IEBC CEO convicted in the infamous Chickengate corruption scandal, is back in the headlines this time round as the shortlisted candidate for the IEBC chairperson position. Last year, the High Court upheld the conviction of Oswago and his deputy, Williamson Charade, over irregularities in the procurement of the voter registration kits for the 2013 general election. Both officials were sentenced to 4 years in prison with an alternative fine of 7.5 million shillings each. The court found that Oswago and Charade had abused their offices in the 1.3 billion shillings tender, a scandal linked to the broader Chickengate corruption case. Oswago will contend with 36 other candidates, among them notable personalities like former Chief Registrar of the Judiciary, that is Anna Madi, and former Chairperson of the Commission for the Implementation of the Constitution, that is CIC, and that's none other than Charles Nyachai. Investors are pouring money into money market funds, driving an 81% surge in Kenya's unit trust assets to 389.2 billion shillings by December 2024. MMFs remain the favorite, commanding 63% of assets, while dollar funds skyrocketed 114% in just 9 months. The CIC Unit Trust scheme leads the market with 82.5 billion shillings in assets, followed by Sanlam at 62.7 billion. Stanbic Unit Trust stole the show with a jaw-dropping 621% growth in just 3 months. Safaricom's new ZDMMF is also making waves, hitting 1.713 billion shillings in assets. Equity Investment Bank, however, was the lone loser, seeing its assets shrink. The Capital Markets Authority has credited the boom to aggressive marketing and an influx of new funds. Kenyan banks are pushing for a shift away from risk-based loan pricing towards standardized reference rate. The banks argue that the current system complicates rate adjustments and creates inconsistencies across the sector. The Kenya Bankers Association, led by NCBA CEO John Gashora, has formally proposed the change to the central bank, advocating for implementation by the end of 2025. The envisioned model would function similarly to the secured overnight finance rate used globally, establishing a uniform benchmark with risk premiums layered on top. The risk-based pricing model evaluates borrowers' risk profiles, including credit history, sector exposure, and repayment capacity, enabling banks to set individualized interest rates, allowing each bank to develop its own pricing model. The Ministry of Health is facing growing scrutiny over the Social Health Authority and the Social Health Insurance Fund, SHA and Shif, amid revelations that powerful individuals, rather than the government, control the scheme, which is quite sad. Now, despite the ministry's authoritative position on its role, it appears to have been reduced to merely implementing directives in what is imagined as a well-crafted scheme, benefiting who? A select few at the expense of millions of Kenyans. Earlier this week, the Office of the Auditor General exposed irregularities in the 104.8 billion shillings Social Health Authority system, with the Auditor General Nancy Gathungu maintaining that her role is limited to auditing and that Parliament must take action. As always, if you want to dive deeper into these stories and stay up to date on everything impacting business here in Kenya and more, be sure to subscribe and follow the Kenyan Wallstreet social media handles across all channels. And thank you so much for tuning in. I look forward to seeing you next week.